Welcome to the deep dive. Ever feel like the world of cryptocurrency is this massive buzzing conversation happening just at an earshot?
Oh, definitely.
You hear about Bitcoin hitting new highs, or maybe some new digital token making waves, and it all feels a bit, well, opaque.
Yeah, impenetrable sometimes. You're not alone in feeling that.
Exactly. The sheer volume of information out there, it can be pretty overwhelming.
It really can.
And that's exactly what we're tackling today.
Absolutely. It can seem like you need I don't know, a computer science degree just to even scratch the surface.
Right.
But the core ideas behind crypto are actually, they're quite elegant, really.
Yeah.
And understandable when you strip away some of the jargon.
That is precisely our mission. We've waded through a ton of beginner-friendly resources, basically acting as your shortcut through all that noise.
Cutting through the clutter.
Yeah. In this deep dive, we're pulling out the crucial insights, the real nuggets, to give you a proper handle on what cryptocurrency is.
And how this whole digital money thing actually works.
Yes, and why it's become such a significant force, and maybe most importantly, how you can explore it safely, if you choose to.
Safety first, always.
Prepare for a few aha moments, hopefully, as we decode this evolving digital landscape.
It's all good.
So let's jump right in.
Yeah.
What is cryptocurrency, like at its most fundamental level?
Okay, yeah. So at its core,
Mm-hmm.
cryptocurrency it's basically a form of digital money.
Digital money. Okay.
Right. Now, the really interesting part, I think, is that it operates, completely independently
Independently of what?
of traditional banks and government control.
Ah, right. So unlike, say, the dollars or euros in your wallet.
Exactly. Those are issued and managed by a central authority, like a central bank.
Yeah.
Crypto just flips that model on its head.
How so?
It's decentralized.
Okay, that's the key word we keep hearing. So if there's no central bank pulling the strings, what's the engine that makes crypto go?
That engine is a technology called blockchain.
Blockchain. Heard of it.
You'll encounter this term constantly in the crypto world, yeah.
Yeah.
Essentially, imagine a shared digital record book, like a public ledger.
Okay, like a giant spreadsheet everyone can see.
Sort of, yeah. That tracks every single cryptocurrency transaction. But what makes it unique is that this ledger isn't stored in just one place.
Not on one server somewhere.
No, exactly. It's distributed across a vast network of computers all over the world.
Wow.
And this makes it incredibly transparent and remarkably secure.
Because no single person or company controls it.
Precisely. No single entity has unilateral control, which makes it virtually tamper-proof.
Okay, tamper-proof. So these cryptocurrencies themselves, are they like actual digital coins sitting in some online vault? Or
Not quite like physical coins, no. Instead, think of them as digital assets, or maybe entries on that very public, unchangeable ledger we just described.
entries on the blockchain ledger? Got it.
Yeah. And you access and manage these entries using something called a digital wallet,
A digital wallet.
which holds the keys, the cryptographic keys that allow you to interact with your funds on the blockchain.
Right, so we have this digital form of value living on this decentralized, super secure blockchain. But how do transactions actually happen? How does the system know I sent crypto to you, for instance?
Well, that's where encryption plays a vital role.
Encryption, like securing data.
Exactly. Sophisticated cryptography secures every transaction, making it extremely difficult for anyone to interfere with or, counterfeit the currency.
Okay. And who processes the transfer, if not a bank?
Well, instead of relying on a bank, crypto transactions occur on what's called a peer-to-peer network, or P2P.
Peer-to-peer, like direct person-to-person.
Essentially, yes. You're sending value directly to another user, cutting out those traditional middlemen.
So potentially faster. No more waiting days for a bank transfer to clear.
That's one of the potential benefits, yeah. Now, let's zoom back in on this blockchain technology again. It sounds absolutely crucial.
It really does. How does it maintain this perfect, impeccable record of everything?
What's fascinating here is the way it structures the information. So, like we said, the blockchain is a digital ledger of all crypto transactions.
Right.
These transactions get bundled together into what are called blocks.
Blocks, okay.
Think of a block as like a digital container holding a batch of recently verified transactions.
Verified how? We'll get to that.
We will, yes. So once a block is filled with transactions, it undergoes this rigorous cryptographic process.
Math stuff.
Lots of math stuff, yes. And then it's linked to the previous block in the chain.
Yeah.
Chronologically.
Ah, linking them together.
Exactly. This chronological and cryptographic linking is what creates the chain part of blockchain.
And that makes it secure.
It ensures its immutability, makes it incredibly hard to change anything once it's there.
Okay, so blocks are constantly being added, but who's the referee here? You mentioned verification. Who decides if a transaction is legitimate before it gets, like, immortalized in a block?
Right, good question. This is where the decentralized magic really comes into play. There's no single referee.
No central authority.
Correct. The verification process involves uh, numerous computers across the globe, often called nodes, or sometimes miners, depending on the system.
Nodes.
These nodes work independently, but they all follow the specific rules of that cryptocurrency's network to check the details of each transaction.
So lots of computers are checking the work.
Exactly. It's this widespread consensus mechanism, everyone agreeing on the state of the ledger, that ensures both security and transparency.
Makes sense. Safety in numbers.
Kind of, yeah. And once a transaction is confirmed by the network and recorded in a block that's added to the chain, it becomes a permanent, unalterable part of the history of that cryptocurrency.
Permanent. Wow.
It's as close to tamper-proof as we can currently get with digital systems.
That's a really fundamental shift in how we think about financial records, isn't it?
It truly is.
So, okay, we have a better grasp of what crypto is and the mechanics of how it works, but why? Why has it captured so much attention and, for some, generated so much value? What's the core appeal?
There are several key factors contributing to its, let's say, perceived value. One significant aspect is the concept of limited supply.
Limited supply, like gold.
Exactly like gold in a way.
Yeah.
Take Bitcoin as the prime example. Its underlying code has a hard cap.
A limit.
Yes. Meaning there will only ever be 21 million Bitcoin created. Ever.
That's it. 21 million.
That's it. And this scarcity, much like with precious metals, can create increased demand, which, in turn can influence its value. It's basic economics, really.
Right. Supply and demand. Scarcity can definitely drive value if people want it. What other factors add to crypto's value proposition?
Well, another compelling advantage is the potential for faster and often cheaper global transactions compared to traditional financial systems.
We touched on that, sending money across borders.
Yeah, through conventional channels, that can be a slow, bureaucratic, and pretty expensive process. Lots of fees, delays.
Tell me about it.
Cryptocurrency can often bypass these intermediaries, offering potentially a more efficient way to transfer value internationally.
That's a huge potential benefit, especially in our interconnected world today.
Absolutely. And we've mentioned it, but the idea of decentralization itself seems to really resonate deeply with many people.
That freedom from banks and governments.
Precisely. The principle of financial sovereignty, the idea that individuals should have greater control over their own money, free from the oversight of governments and central banks, that's a core philosophical driver for many crypto adopters.
Okay, I can see the appeal there. And it's clearly evolving, isn't it? It's not just about being digital money anymore. We're seeing all sorts of innovation.
Oh, absolutely. The blockchain technology underpinning cryptocurrencies is proving to be incredibly versatile, far beyond just currency.
Like what?
Well, consider NFTs, non-fungible tokens.
NFTs, right. The digital collectibles.
Sort of. They allow for unique digital ownership of, well, anything digital, really. Art, music, virtual real estate, game items.
Interesting. What?
Then there are smart contracts.
Smart contracts. What makes them smart?
They're essentially self-executing agreements written directly into code. They run on blockchains. Like Ethereum is famous for this.
So the contract runs itself automatically when conditions are met.
Exactly. No need for a middleman to enforce it. This is automating processes and enabling entirely new types of decentralized applications, or dApps.
dApps.
Yeah, applications that run on a blockchain or peer-to-peer network rather than on a single company's centralized servers.
So like decentralized versions of apps we use now?
Potentially, yeah. And this is having a ripple effect across various industries already. Gaming, digital collectibles, and especially the burgeoning field of decentralized finance, or DeFi.
DeFi. Heard that one too. What's the goal there?
DeFi aims to basically recreate traditional financial services, lending, borrowing, trading, insurance, but in a decentralized, often more accessible way, built on blockchain.
Wow. Okay, it's definitely a landscape of rapid innovation then.
Very much so.
Now, for someone just starting to make sense of all this, which cryptocurrencies are the really key ones they should at least have on their radar, like the big names?
Yeah, it's helpful to be familiar with some of the major players. Obviously, Bitcoin, BTC.
The original?
The original, yeah. As
Yeah.
we've discussed, it's the first and still holds the largest market capitalization by far. Often seen as the benchmark, maybe like a digital gold.
Okay. Bitcoin.
Oh, else.
And then there's Ethereum, ETH,
which you mentioned for smart contracts.
Exactly. Ethereum is really a platform. It enables the creation and execution of those smart contracts and all these decentralized applications we talked about. Its native cryptocurrency is called Ether, but people often just say Ethereum.
Got it. Bitcoin and Ethereum. Any others that pop up a lot?
Yeah, beyond those two giants, you'll often hear about cryptocurrencies like Solana or SOL and
Mm.
Cardano, AD.
What's their focus? They generally focus on different technical aspects. Solana is known for aiming for faster and cheaper transactions. Cardano often emphasizes a more research-driven approach, aiming for scalability and sustainability. They represent different approaches to blockchain design.
Different flavors of the tech.
Kind of. And finally, it's really crucial to understand stablecoins.
Stablecoins. The name suggests stability.
Precisely. That's the goal. Things like USDT, which is Tether, or USDC, USD coin.
How do they stay stable?
These are cryptocurrencies designed to maintain a stable value, typically by being pegged one-to-one to a traditional fiat currency, most commonly the US dollar.
So 1 USDC aims to always be worth $1.
That's the idea, yes.
Hmm.
Their main purpose is to reduce the extreme price volatility you see with other cryptocurrencies like Bitcoin or Ethereum.
Ah, so they're useful within the crypto world.
Very useful, yeah. For trading between other cryptos, for holding value without exposure to wild swings, for payments in some dApps, they serve an important function in the ecosystem.
Okay, this gives us a really solid foundation now. Bitcoin, Ethereum, some alternatives like Solana Cardano and stablecoins.
Those are some key ones to know, yeah.
Now, for someone listening who's thinking, all right, I'm starting to get it, how do I actually take the first step? How do I get involved in the crypto world? And maybe more importantly, how do I do it safely?
Right. And safety should absolutely be the top priority. Number one concern.
Definitely.
So the very first thing you'll likely need is a crypto wallet.
The digital wallet we mentioned earlier.
Exactly. This is essentially your digital tool to store, send, and receive your cryptocurrencies. Think of it like your bank account for crypto, but you control the keys.
And there are different kinds.
Yes, there are two main categories people talk about.
Yeah.
Hot wallets and cold wallets.
Hot and cold. Okay, that's an easy way to visualize the difference, maybe. Tell us more.
Sure. Hot wallets are essentially software-based and, crucially, connected to the internet.
Online wallets.
Yes. This includes mobile apps. You might hear names like MetaMask or Trust Wallet, web-based wallets accessible through your browser, and also desktop applications you install on your computer.
And the advantage there is?
Convenience, mostly. They're easy to access, especially if you plan on actively trading your crypto or interacting with dApps frequently.
But, there's always a but.
But, because they are online, they present a higher potential risk. They can be targeted by hackers, malware, phishing attacks.
So easier access means potentially less secure. Makes sense. What about these cold wallets then?
Cold wallets are the opposite. They're typically hardware-based and remain offline most of the time.
Offline, like a USB stick.
Kind of like a specialized, highly secure USB stick, yeah. These are physical devices. Companies like Ledger and Trezor are well-known makers.
Hardware wallets.
Right. And because they're offline, they provide a significantly higher level of security for storing your crypto, especially long-term.
More secure, but maybe less convenient.
Exactly. Accessing your funds for frequent trading isn't as quick or easy. You have to physically connect the device. There are also things like paper wallets, which are basically just printing your keys out, but hardware wallets are more common now.
So, hot for convenience, cold for security.
That's a good way to think about it. The best choice, or maybe a combination, really depends on how you plan to use crypto. Frequent trading. Maybe mostly a hot wallet, but with caution. Long-term holding, like investing. A cold wallet is generally strongly recommended for the bulk of your funds.
Okay, choose your digital safe based on your activity level and security needs that make sense. What's the next step after getting a wallet sorted?
Well, you'll need a place to actually buy, sell, and trade cryptocurrencies. And that's where crypto exchanges come in.
Exchanges. Like a stock exchange, but for crypto.
Pretty much, yeah. There are numerous exchanges available, and it's absolutely crucial here to choose reputable and well-established ones. Trust is paramount.
Any examples of reputable ones?
Some popular and generally well-regarded exchanges, especially for beginners, include names like Binance, Coinbase, and Kraken. There are others, of course, but those are big players. Do your research on fees and features, too.
Okay, so stick with the known names, the ones with a good track record. Once someone has their wallet, they've chosen an exchange. What's your advice for making that very first purchase? Nerves might be kicking in.
Absolutely. My strongest advice is start incredibly small.
Really small.
Yes. The cryptocurrency market is famous or infamous for its volatility. Prices can swing wildly.
We've all seen the headlines.
Exactly. So it's vital to approach investing with extreme caution. Get comfortable with how the exchange interface works, observe the price fluctuations for a bit, and under absolutely no circumstances, invest more money than you can afford to lose. Seriously.
That old saying, only invest what you can afford to lose, seems extra relevant here.
Extremely relevant. Think of it like dipping a toe in the water to test the temperature before you even think about diving in. Learn the ropes with a tiny amount first.
Sound, responsible advice. Small steps, learn as you go. Now, we absolutely cannot stress enough the importance of safety and security. What are the non-negotiables? The absolute must-do security measures.
Okay, non-negotiables. First and foremost, use strong, unique passwords for every account. Your wallet, if it has a password, and definitely all your exchange accounts.
Unique passwords, not the same one everywhere.
Absolutely not. Use a password manager if you need to. Second, enable two-factor authentication, 2FA, everywhere it's offered. Your exchange, your email linked to the exchange, everywhere.
That extra code from an app or text message?
Exactly. It adds a critical extra layer of security beyond just your password. Don't skip it.
Okay, strong, unique passwords, 2FA everywhere. What else?
Be extremely vigilant about scams. Unfortunately, the crypto space attracts a significant number of malicious actors trying to trick people.
What kind of scams?
Oh, all sorts. Be wary of anything promising guaranteed high returns. That's a huge red flag. Pump and dump schemes promoted on social media. Phishing attempts.
Phishing, like fake emails or websites.
Yes. Scammers trying to trick you into revealing your password, your private keys, or send them crypto. Fake endorsements from celebrities are common too. And promotions for unverified or obscure projects that suddenly appear everywhere. If it sounds too good to be true,
It probably is.
it almost certainly is in crypto.
Those red flags sound serious. What about protecting the wallet itself? You mentioned keys.
Yes. Critically important. Never, ever share your private keys or your seed phrase, that recovery phrase you get when setting up a wallet with anyone, for any reason.
Never, ever.
Never, ever. Anyone asking for it is trying to scam you. Those keys are the direct access to your crypto. If someone else gets them, your funds are gone. Full stop.
Wow. Guard those keys like your life depends on it.
Pretty much. Also, only download wallet software directly from the official websites of the providers. Be very, very cautious of lookalike websites or links sent in emails or messages. Go direct to the source.
Good tip. Anything else on the safety front?
Yes. Do your own research. DYOR. It's a common acronym in the crypto community for a very good reason.
Don't just trust random people online.
Definitely not. Don't base your investment decisions solely on hype you see on social media or tips from friends who might not know much either. Investigate the team behind a project. Read their white paper, the document outlining the project. Look for independent security audits of their code, especially smart contracts. See if the cryptocurrency is listed on reputable exchanges. That can be a sign of some level of vetting, though not a guarantee.
So treat it with serious due diligence, like any significant financial decision.
Absolutely. And just to circle back to something we mentioned earlier, volatility. It's absolutely crucial for newcomers to understand and accept that cryptocurrency prices can and do fluctuate dramatically and rapidly.
It's not a smooth write-up.
Far from it. This isn't some guaranteed path to quick riches. There are significant inherent risks involved, and you could lose your entire investment.
Understanding and accepting that market volatility seems key then.
It really is. It helps manage expectations and hopefully helps avoid impulsive decisions based on fear or greed during big price swings.
And finally, keep learning.
Absolutely. Make learning a continuous process. The space evolves incredibly quickly. There are a wealth of reliable resources available if you look for them. Follow the official blogs of major crypto projects, reputable crypto news outlets like Desp or Cointelegraph, educational YouTube channels that focus on explaining fundamentals clearly. Knowledge is your strongest shield in this space.
Excellent advice. Okay, so we've covered the essentials of getting started safely: wallet exchange, start small, security first, DYOR, understand volatility, keep learning. Are there any common mistakes you see beginners making over and over again? pitfalls to actively avoid?
Oh, yes, there are definitely several recurring pitfalls. One of the most prevalent is probably investing without doing any real research.
The opposite of DYOR.
Exactly. People often jump into a particular coin or token based purely on hype, maybe a tweet they saw or a tip from someone, without actually understanding its underlying technology, its purpose, the problem it solves, or the team behind it.
Just chasing the buzz.
Pretty much. It's easy to get caught up in the excitement, but yeah, a little digging goes a long, long way towards making informed decisions.
Makes sense. What's another common misstep?
Ignoring those fundamental security practices we just hammered home, that's a huge one.
Like weak passwords or no 2FA?
Exactly. Using weak or reused passwords, failing to enable 2FA, clicking on suspicious links, or even leaving substantial amounts of crypto sitting on an exchange wallet long-term instead of moving it to a personal wallet, especially a cold one. These things drastically increase vulnerability to theft.
So security isn't a one-time setup, it's ongoing vigilance.
Absolutely. Another frequent mistake is succumbing to FOMO, the fear of missing out and engaging in emotional trading.
Ah, FOMO, chasing pumps.
Yeah. Seeing a price surge rapidly can trigger that FOMO, leading people to buy in high, often near the peak, only to panic sell when the inevitable correction or dip occurs.
Buying high, selling low. The opposite of what you want.
Precisely. Sticking to a well-thought-out, long-term strategy, if you have one, is crucial to avoid those emotional roller coaster rides. Easier said than done, though.
I can imagine, especially when you see those price charts going absolutely wild. Definitely essential advice, though. Any other common errors to flag?
Yes. Not fully understanding the fees and transaction costs involved. That's another area where beginners can get caught out.
Hidden costs.
Not always hidden, but maybe not fully understood. They might not realize that exchanges often charge trading fees for buying and selling. And also that network transaction fees, sometimes called gas fees, especially on Ethereum, are required to process transactions on the blockchain itself. These can vary a lot and can add up, impacting overall returns.
So factor in the fees. Good point.
Also, as we discussed, falling victim to scams and fraudulent schemes remains a constant risk. Be incredibly skeptical. If an offer involves guaranteed profits, high returns with no risk, pressure to invest quickly, or lacks transparency about the team or tech, run away.
Healthy skepticism is key.
Very healthy. And finally, maybe putting all your eggs in one basket. Not diversifying your cryptocurrency holdings if you choose to hold multiple assets.
That's betting everything on one coin.
Yeah. Putting all your capital into a single crypto asset, no matter how promising it seems, exposes you to unnecessary risk. If that one project fails or the price crashes, you lose everything. Spreading your investments across a few different well-researched cryptocurrencies can help mitigate potential losses. It's basic portfolio management, really.
Don't put all your crypto eggs in one digital basket. Got it.
Something like that.
Okay. These are all incredibly valuable insights and warnings for anyone venturing into the crypto world for the first time. So let's try and summarize the key takeaways from our deep dive today into the basics of cryptocurrency.
Yeah, let's condense it. In essence, cryptocurrency represents a decentralized form of digital money. It operates on this underlying technology called blockchain.
Which is like a secure, shared public ledger.
Exactly. And crypto offers potential advantages like greater financial autonomy, maybe faster global transactions. But it's also a complex and highly volatile environment. It absolutely demands a thorough understanding of the fundamentals, a really strong commitment to security best practices.
Like strong passwords, 2FA, guarding your keys.
All of that. And a cautious, informed approach to any participation or investment. And continuous learning is it's absolutely key. You can't just learn it once.
Right. Starting with these fundamentals we discussed and then gradually expanding your knowledge seems like the most sensible path forward.
Definitely.
And I suppose as this transformative digital revolution continues to unfold, it presents a pretty fascinating question for you, our listener, to ponder.
What's that?
How might these decentralized systems, the ones powered by blockchain technology, fundamentally reshape not just our financial systems, but potentially many other aspects of our lives in the years ahead?
Yeah. That's the bigger picture, isn't it?
It really is. It's a profound area to contemplate, extending far beyond just the daily ups and downs of cryptocurrency prices. Something to think about.
Definitely something to think about.
A truly thought-provoking question to consider as you continue your own exploration. Thanks so much for joining us on this deep dive into the world of cryptocurrency basics.
My pleasure.
Until our next exploration.